Hello and welcome to Swag Academy. In this video I will make an in-depth stock fundamental analysis of the company Lululemon. I will cover its history, business model, growth and revenue, profitability, balance sheet, valuation and finally do the 3M analysis. So make sure to watch till the end of the video. Lululemon was founded in 1998 by Chip Wilson. Its headquarters is in Vancouver, Canada. The company has a $34 billion market cap, 38,000 employees worldwide. Its stock is trading around $280 at the time I'm making this video. Lululemon stock outperformed the S&P 500 as well as other apparel, accessories and luxury good companies. Impressive performance. However, this does not necessarily indicate that the same will happen in the future. Lululemon sells its product through a network of stores that owns and operates, as well as directly to customers through online sales. In addition to e-commerce and digital sales, the company sells its products to wholesale customers, such as health clubs, fitness centers, and yoga studios, as a way to enhance its brand image. Other sales avenues include warehouse sales and sales through showrooms and temporary locations. Lululemon don't own or operate any manufacturing facilities. The company relies on a limited number of suppliers to provide fabrics or produce its merchandise. As of 2023, a group of approximately 45 vendors manufactures the products, 5 of which produce 56% of them, with the largest manufacturer producing 15%. During 2022, 39% of Lululemon's products were manufactured in Vietnam, 14% in Cambodia, 12% in Sri Lanka, 8% in Bangladesh, and 7% in Indonesia, and the remainder in other regions. Lululemon faces growing competition in the athletic apparel industry from retail giants like Nike, Adidas, and Under Armour. Lululemon grew its revenue from $1.79 billion in 2015 to $9.6 billion in 2024, a 5.35x growth in 10 years, a compound annual growth rate of 18%. 79% of the revenue comes from North America, 10% from China, 11% from the rest of the world. As you can see, Lululemon still have a lot of growth potential if they expand internationally. Lululemon have 438 stores in North America, 127 stores in China, 98 in Asia Pacific, and 48 in Europe. So as you can see, the number of stores is also increasing over the years, meaning Lululemon is opening new stores every year. This will definitely increase the revenues in the future. Now let's check the profitability of the company. The gross profit is the result of revenue minus the direct cost to create these revenues. The gross profit margin is the result of gross profit divided by the revenue. The gross profit margin shows the amount of profit made before deducting selling, general and administrative costs. The gray line in the chart represents the gross profit margin over the years. The gross profit margin is 58%, a very good percentage for a closing company. As you can see in the chart, the gross profit margin is increasing with the revenue showing that the company is becoming more efficient and have a good operating leverage, which is something I really like to see as an investor. Next, let's check the operating profit and the operating profit margin. Operating profit is the net income derived from a company's core operation. It is the amount of money that a company has left over after meeting its operating costs but before paying its taxes. Lululemon operating profit was $2.2 billion in 2024. The operating margin was 22.9%, which means for every dollar of revenue the company makes, 22.2 cents are operating profit. Very good results for a closing company. Furthermore, the operating margin is increasing over the years and with the increasing revenue. Lululemon made $1.64 billion free cash flow in 2024. The free cash flow increased from $195 million in 2015 to $1.64 billion in 2024. Amazing growth. The company have been investing this free cash flow to buy back stock and open new stores. Now let's check the efficiency of the company. In other words, analyze the operating cost. The cost for SG&A, which means sales, general and administrative costs, are $3.4 billion. It is clear that the percentage of the operating costs have been increasing over the years and with the revenue, which is something I don't like to see as an investor. They increased from 29.9% to 35.4%. This may be due to the high inflation we have been facing the last couple of years. Lululemon must adjust the salary of 38,000 employees to inflation after all. Now let's have a quick look at Lululemon's balance sheet. Lululemon has $3.76 billion in current assets. The current assets are the assets that are liquid and available to the company within 1 year. They include cash and short-term investments. The total current liabilities are the liabilities which the company must pay within 1 year. Lululemon total current liabilities are $1.38 billion. Furthermore, Lululemon have no debt to pay. By calculating the current assets minus the current liabilities, Lululemon is left with $2.38 billion cash on its balance sheet, making the balance sheet extremely strong and healthy. Lululemon can use this money to buy back stocks, invest in the company, or to buy another company. So the balance sheet is very clean and strong. Now let's jump to valuations. Lululemon has a 3.61 price to sales ratio, a 22.49 PE ratio, a 16.56 price to cash flow ratio, and an 8.34 price to book ratio. Pause the video and check how the current ratios compare to previous years. With a 22 PE, the company is not cheap, however it's also not expensive. Now let's do a discounted cash flow analysis to determine the fair value and intrinsic value of the stock. This is how my model works. I calculate the worst case scenario to determine the downside, a normal case and best case scenario. The first column represents the growth rate for the next 5 years. The second column represents the growth rate for the 5 years afterward. The third column represents the terminal multiple or the PE multiple at which the stock will be sold in 10 years. The fourth column represents the discount rate or the rate of return the stock will grow over the years. Considering an 18% growth for the first 5 years, a 15% for the 5 years afterward, a terminal multiple of 16 and 15% discount rate. The intrinsic value of the stock is $233. Lululemon is trading at $280 currently, 16% above the intrinsic value. Finally, the 3M analysis, 1M for moat, 1M for management, and 1M for margin of safety. Lululemon does not have a strong moat. It is a well-known brand for good quality products. However, this does not protect the company from competition. And if the trend changes, for example, influencers on social media started wearing other brands, then Lululemon will lose a lot of clients and revenue. Management have done a great job thus far. The company have been growing organically and without the use of debt. The company is very profitable and have a strong balance sheet. Furthermore, management have been using the free cash flow to buy back their own shares, which returns value to us shareholders. The company is trading at a premium price above its intrinsic value, so that is a no for the margin of safety. Now let's see what analysts think of the company. Most analysts consider Lululemon as a strong buy or buy. Some of them recommend to hold. So all in all, analysts are bullish on the company. The average analyst price target is $392, which is above the current price of $280. Management and insider own 4.54% of the shares. This is something I really like to see. This means that management believes in the company and have aligned goals with us shareholders. In conclusion, Lululemon is a great company with a great future. Revenues are growing and so is the operating profit and free cash flow. The company is very profitable, especially when you compare it to its competitors Nike and Adidas. Management is doing an amazing job thus far growing the company profitably and they are buying back shares. However, the company does not have a strong moat to protect it from competitors and it is trading at a premium price. Let me know in the comment section below what you think of the company and if you will buy the stock.